Welcome to online lectures by CA Studies. For more lectures online, please do visit castudies.lk.
Let's look at how to calculate the cost of the non-current assets and the depreciation. It's a main topic. Cost, depreciation. Now under the depreciation we have to learn what are the methods available. Next, revaluation. And disposal. Non-current asset disposal. These are the main topics we have to learn. To understand this, LK 16 should be understood. LK 16. I am always saying standards are established in basically based on the 7 topics. First one is definition. Second one is recognition. Third one is derecognition. Fourth one is measurement. Definition, recognition, measurement. Fifth one is presentation. Sixth is disposal. Actually first one is scope, definition, recognition, derecognition, measurement, presentation, not disposal, disclosure. So these are the 7 topics we have to learn. First one is definition. According to LK 16, first, non-current assets. Non-current assets are regulated by LK 16. So we have to understand the definition of the non-current assets. Then non-current assets expenditure will be the capital expenditure. So each year we have to allocate the non-current asset expenditure according to useful lifetime of the asset or useful lifetime of the business, whichever is lower, right? So then depreciation will be there. So non-current asset will be capital expenditure. Shortly we can say capex, short form. Now depreciation definition also we have to understand, right? This is summarizing. When we do the calculation, I will separately do, but if you want, you can do the calculation under this for your short notes. Now recognition, how to recognize the non-current asset in the financial statements. What is the criteria for recognize the non-current asset? What is the criteria for recognize the depreciation? Then derecognition, how we can derecognize the non-current asset from the financial statement. How? When non-current asset in the financial statement should be taken out, right? Now derecognition, what is the criteria and what is the situation? The depreciation also, from which point we should not charge the depreciation. We charging the depreciation means recognition. We not charging the depreciation. That is called we stop to charge the depreciation in the financial statement. So what is the criteria and situation? Then measurement. When non-current asset purchased and first day what is the measurement? That is called initial measurement. How the initial measurement should be done. Then subsequent measurement. Each year end, how this non-current asset should be valued. That is called subsequent measurement. Now presentation. Non-current asset defined and recognition criteria also done. Then we have valued. After valued, what is the debit and credit? Where we have to show that non-current asset. Balance sheet means presentation of the non-current asset is balance sheet. Depreciation means presentation of the depreciation is balance sheet and the profit or loss. In the balance sheet, accumulated depreciation we will add. Then automatically non-current accumulated depreciation will be deducted from the non-current asset, and carrying value of the non-current asset will be shown. That carrying value of non-current asset valuation called subsequent measurement in each and every year. Right? Depreciation, next presentation is the profit or loss. Then disclosure. Disclosure in the notes, we will have to include in the notes, that is what is the depreciation policy we are following, what is the depreciation method we are following, what is the non-current asset valuation method, is a cost method or revaluation method. Right? So subsequent measurement, we will have to see there are two types of subsequent measurement. First one is cost model, revaluation model. What is the criteria? If cost model use, what is the accounting treatment? If revaluation model use, what is the accounting treatment? Let's see one by one. Definition of the non-current asset is assets which use more than 12 months. It's a definition of more than 12 months assets which can be used more than 12 months is non-current asset. So asset which can be used more than 12 months. So asset which can be used more than 12 months. Then what is the definition of the asset? Asset means future economic benefit of the asset should be flowed to the entity. Second one is controlled by the entity. So non-current asset means asset. So non-current asset already included assets definition. Asset definition is more than controlled by the entity and future economic benefit flowed to the entity. Then asset will be more than 12 months we can use. Right? Let's talk about LKS 16. Take a page number 35. Right? LKS 16 covers all aspects of accounting for property, plant and equipment. This represents the bulk of the items which are tangible non-current assets. Scope. LKS 16 should be followed when accounting for property, plant and equipment unless another standard requires a different treatment. Right? If LKS 16 applied to the tangible non-current asset, if any tangible non-current asset applied by the other standards, there are other many standards there. LKS 40 there, that is for investment property. Investment property means land and building. Right? Land and building used for investing purpose by earning the rent. To earn the rent we use in the property, that is called investment property. If investment property also land or building, if land or building come under the LKS 40, LKS 16 application will not be applied. Right? Now LKS 40 is the standard. So other standard, if other standards not taken any asset to that scope, all the tangible non-current asset will be come under the LKS 16. All the accounting treatment should be through the LKS 16. Right? LKS 16 does not apply of the following. First one is any property, plant and equipment held for resale. Any property, plant and equipment held for resale. Held for resale means ordinary course of business. In the real estate business, they purchase in the building, purchase in the land and resell. So holding for some time and resell. So that is not a non-current asset. Here non-current asset means don't think all the building are non-current asset. understand the substance or form, understand the meaning of that asset, understand the understand the substance. Substantially we have to look what is that asset, what is the purpose of that asset. If you purchase in the property used for office purpose, means tangible non-current asset. If purchasing the land to resale, it's a trade of stock, it's an inventory. In a estate company, in a real estate business, it's an inventory. In a construction company, purchasing the land will be inventory, right? So resale. So in bracketing liya so L for resale means ordinary course of business, inventory. If inventory purchase is a tangible non-current asset, it's an inventory, right? Then it is applied by the LKS 2, not LKS 16, right? ලියා ගන්න. මේක ස්ටෑන්ඩඩ් එක සමරයිස් කරලා මම කියන්නේ මේක හොඳටම ලියා ගන්න. හරියට ලියා ගන්න මේක මොකක්ද කියලා. හරිද? Second one is biological assets relating to agricultural activity other than the bearer plants. The standard applies to bearer plant. Now biological asset relating to agricultural activity. Agricultural activity, right, are taken by the agricultural business, agricultural industry companies. For any biological asset means assets which are non-current asset, which are tangible current asset, but it can be livelihood. Livelihood means cow, pig, goat, what else, then hens, ducks. So those are biological non-current assets. Biological assets are regulated by the LKS 41, agriculture, right? Other than the bearer plant. Bearer plant means there are plants. That plants are we are not recognizing, we are not treating that plant as an agricultural plant. For example, tea plant. Tea plant in a tea estate is the bearer plant, right? From the tea plant we taking the tea leaves, right? So it is the LKS 16 will regulate that, right? When we learn the LKS 41, we will be dividing the non-current asset based on the bearer plant or non-bearer plant. Bearer plant come under the LKS 16, non-bearer plant come under the LKS 41. So LKS 16 will be applied only to the tangible non-current assets. Now exploration for and extraction of minerals, oil, gas and other non-regenerative resources. So exploring the gas or oil or anything, extracting the inventory to the business, not extracting the land or extracting the non-current asset. And also patent right of the extracting is the intellectual property. So LKS 16 only applied to the tangible non-current asset. So scope is this, it is not, will not be tested in your exam paper. So do not worry about that. Now see the definition. The standard gives a large number of definitions. Property, plant and equipment are tangible assets that are held by entity for use in the production or supply of goods or service, for rental to others or for administrative purpose, and are expected to be used during more than one period. More than one period means more than 12 months. Cost is the amount of cash or cash equivalents paid or the fair value of the other consideration given to acquire an asset at the time of its acquisition or construction. Residual value is the estimated amount that an entity would currently obtain from disposal of the asset after deducting the estimated cost of the disposal, if the assets were already of the age and the condition expected at the end of the useful life. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Carrying amount is the amount which an asset is recognized after deducting any accumulated depreciation and impairment losses. The recoverable amount is the amount which the entity expects to recover from the future use of an asset, including its residual value on disposal, the higher of net selling price or value in use. Now cost of the asset. Cost of the asset. Cost of the asset says purchasing the asset by giving the money, right? Say giving the money 100 million and also giving the gold. Gold, say 1 kilogram of gold giving. If 1 kilogram of gold given, how much? It will at least 10 million. So 1 kilogram gold given, we do not know the amount. So fair value of gold will be calculated. 1 kilogram gold is say 10 million. So 10 million worth of gold given and purchased, right? This is money given, this is gold given, right? Now 110 million is the cost of the cost of acquisition, cost of the property. That's why I say amount of the cash or cash equivalents paid or the fair value of other consideration given. This is called other consideration given, right? Next one is residual value. Once building used for say only 10 years, we can use the building, 110 million. After 10 years this building is fully used and fully expired. So if we sell the building, say 10 million we can get, but 1 million cost incurred in order to sell. So 9 million is residual value. So actually by selling this building we can recover the 9 million from seller after 10 years. How much we cannot recover by selling? 110 million minus 9 million. So 101 million we cannot recover. 101 million we should recover through charging the depreciation over 10 years. So what is the 1 year depreciation? 1 year depreciation will be 10.1 million. So after 10 years 101 million we will charge, we have been charged, and after that value of that building will be 9 million, right? So 9 million future economic benefit flow to the entity. 9 million will be residual value after 10 years. This is how definition should be understood. Now next one is fair value is the price that would be received to sell an asset or pay transfer liability. Now say after 10 years residual value is 9 million, but by selling this building, if you can take a 12 million, market price is 12 million, so 12 million is market price, so it's a fair value, right? Standard allows to use the fair valuation to the building also. That is called revaluation model. For example, take this is a little bit complex, please listen carefully. This building is used for 10 years, right? So cost of the building is 110 million. This is called initial measurement. First year depreciation charge 10.1 million. After 1 year, right, this value of the building will be 99.9 million. Is it correct? This is called carrying value. Deducting the depreciation and first year end, value will be 99.1 million. So if we following this method, cost minus accumulated depreciation, if any impairment losses, if building damages, we can calculate that loss also, right? If rooftop damage, so one floor will be gone out, that's called impairment, right? So we will we will skip the impairment here. Now 99.9 million. This is called subsequent measurement. Subsequent measurement cost method, cost model. Company can use the revaluation model. When revaluation model comes, cost assets fair value should be find out. Say asset fair value is found. Asset fair value should be found. After a year, carrying value of the asset is 99.9 million. On this day, fair value of the asset, say 100 million. Standard allows companies to use any of these model, right? Say if company using the fair value model, if fair value model use, assets can be increased, right? So say after 1 year, company found out the cost is 99 million, 99.9 million, fair value is 100 million. So company revalue the, so 0.1 million is the revaluation surplus. Revaluation surplus. So if this model used, this is called subsequent measurement revaluation model. This simple explanation. Revaluation method. Now we have the double entry. So I have calculated everything. Students who are watching there will definitely request a double entry for this. That's the next problem, right? According to standard topics, right? First one is definition, right? Second one is recognition. Third one is derecognition. Derecognition is the disposal. The fourth one is measurement. Under the measurement, initial measurement there. Initial measurement always cost. Subsequent measurement, company can use the cost model or use the revaluation model. Standard allow. But if cost model used, each and every year cost model should be followed. If revaluation model used, each and every year revaluation model should follow. Accounting policy cannot be changed. If accounting policy change, retrospective adjustment should be placed. It means say first year we are using the cost model, revaluation model. Second year also we using the revaluation model. Third year also we using the revaluation model. If fourth year if we use the cost model, first year, second year, third year we use the revaluation model. Everything will be everything will be restated to cost model, and that balance should be showing into changes in equity under the retained earnings. Right now, when we pages the entry, double entry will be debit building 110 million, credit what? Credit cash 100 million, and credit gold 10 million. If company has the gold only, gold can be provided, right? 10 million. Now first year depreciation double entry will be debit depreciation expense. Finally it will be charged to the non-current asset, sorry, to the profit or loss, accumulated depreciation 10.1 million. Depreciation expense will be charged to profit or loss. Accumulated depreciation total will be deducted from the non-current asset and showing the carrying value. Now it's passed. Now assume we not using the cost model. With cost model use, these are the double entry, two double entry we found. If we use in the fair valuation, that's a revaluation model, right? Revaluation model use, this two double entry will be passed first. After that, third double entry is there. Now we estimate in the cost of the building is 100 million, right? Revaluation value of the building is 100 million. Now we have to show this 1 million, 0.1 million extra to the non-current asset. Now after these two passed, right, non-current asset carrying value will be like this. Building is under 10 million, right? Cost is under 10 million. Accumulated depreciation is 10.1 million. So carrying value is 99.9 million. We have to charge just 0.1 million extra there. Now for this revaluation, we have to pass the double entry. We debit to the building account. Debit to the building account 0.1 million. Credit where? Credit revaluation surplus account. We open a new account, revaluation surplus account. This revaluation surplus account is income, deferred income. It's not be earned yet. Building එක fair value කරා කියලා මේ income එක වැඩි කරන්න බෑ. 0.1 million වැඩි. එතකොට profit or loss එකෙන් එක පෙන්නුවොත් profit එක වැඩි වෙනවා. So showing the profit higher but still not earn that income. So it's a contradict the prudent concept. Prudent concept saying assets cannot be overvalued, liability cannot be undervalued, expense cannot be undervalued, income cannot be overvalued. Should be accurate, should be reflected the correct future economic benefit. So still we revalued to 100 million, as a result 0.1 million extra profit earned, but still not sure it will be really earned or not. That's why it should not be shown under the profit or loss. It should be shown under the OCI items. After net profit comes, right? Net profit after tax, right? Other comprehensive income item will be shown in their revaluation, other comprehensive income statement. This is called other comprehensive income statement. Under the other comprehensive income statement, other comprehensive income item will be shown. That is called revaluation surplus. Say revaluation surplus is 0.1 million. So total comprehensive income will be XX plus 0.1 million, right? This will be shown in the changes of equity different column, right? Not under the retained earnings. All the profit actually earned will be shown under the retained earnings. This will be shown under the revaluation surplus. This is the method. Next year, now revaluation surplus 100 million. Now next year again we have to charge a depreciation. What is the depreciation charge now? Is it 10.1 million? When revaluation done, residual value, this question doesn't talk about the residual value. I didn't say residual value change. Again we think residual value is same amount, 9 million, right? So opening balance of the inventory opening balance of the building is 100 million now. Residual value is how much? 9 million. Now depreciable amount is 91 million. So 1 year we have depreciated. So balance 9 years we have to depreciate. So 91 divided by 9. Right? 99 divided by 9 how much? 10 point 10.1, again 10.1, right? Ah, 10 100 divided into 9, 10.11, right? Depreciation charge is change 10.11. First 10.1, here 10.11, 10,000 increased because of revaluation surplus. Now we charge in the 10.11 as the depreciation. So carrying value of the asset is now 91 minus 10.11, 80.89. Now second year carrying value is 81.89. Now we will say this value is the carrying value, not the revaluation value. Okay, now technical word for 80.89 is carrying value. Now as a policy of the business, again revaluation should be done. It's a costly part of the company. If revaluation model followed, each and every year revaluation should be done by the specialized revaluer in a industry. We have to hire a revaluer from the industry and he has to involve in revaluation. This is the revaluation model. Now what else we have to learn? So initial measurement we understood, cost of the inventory should take. Then subsequent measurement also we understood, cost model or revaluation model. Definition okay. Recognition is this, recording the entries. Cost model is easy. The revaluation model little bit complex because we have to revalue. Now derecognition. Assume same building, derecognize. We are going to sell after 2 years. After 2 years carrying value is 80.89. Now we have used the revaluation model for this subsequent measurement of this non-current asset. Now we are going to dispose. Say carrying value of the building is 80.89. We are selling this building for 100 million. Sale price of the building is 100 million. 100 million. Now carrying value of the building is how much? 80.89 million. Now actual profit from this building is 19.11 million, right? Profit on sale of this building. Profit on sale of this building is revenue income or capital income. Selling the capital item, so it should be capital income. So capital income should be categorized under the other income and profit or loss. Now for this definitely double entry should be passed. Always go with the double entry because your final question will be prepared in the financial statement. We are going to prepare the biggest financial statement in a paper class, right? Therefore go with this. Now we receiving the money, say it's not a receivable, we receive the money. So cash 100 million we receive. Credit how much? Credit 80.89 million building. 80.89 million building. Balance credit disposal income. Disposal income 19.11 million. This is one method of double entry, but actually this is not followed in theory. Actually these are followed in the practical, right? But this is not a method actually follow. Once one asset decided to dispose, that asset should be transferred to the disposal account. So first 80.89 million we have to take out from the disposal account. First we have to debit disposal account. What is the cost of the building? Disposal account, cost of the building was 110 million. This cost will not be changed here, right? In a balance sheet, accumulated depreciation only increasing. Due to accumulated depreciation increment, that carrying value will be reduced, right? Therefore in a building account, amount is not 99.9 million. In a building account, cost value is shown, right? All the non-current assets should be reflected in the historical cost according to conceptual framework in a measurement chapter, in a measurement topic, there are 4 types of measurement: historical method, current cost, net realizable cost, and present value. According to conceptual framework, non-current assets should be shown in the general ledger in a historical cost. So 100 million will be taken here, right? Debit 100 million, credit building account, right? Building account 100 million removed. Now to the disposal account, we have to take in the accumulated depreciation of the building also. Accumulated depreciation in the credit side, we have to take to the debit side. Accumulated depreciation we remove from accumulated depreciation account 10.1 million and credit disposal account 10.1 million. Say if disposal account is like this, disposal of building account is like this, disposal of building account is like this, we first debit 100 million, right? Building debit 100 million, credit accumulated depreciation how much? 10.1 million. So net value is 99.1 million. Now we sell the building. So debit to the cash, credit to the, here I pass the 2 double entry, but here debit cash, right? Debit cash, credit disposal account. Here I am not following the T account form, I am following just a calculation method, right? Following the calculation method is best method using, other than using the T account. Now cash is debit, disposal account is debit 100 million. Now what is the profit? Now add this 2 and deduct this one, profit will be 99.1 million, right? 99.1 million. So this is the if cost model used, first year, right? If revaluation model used in first year, now disposal account, we revalue the building to the 100 million. Now here 110 million, 99.9 million. Now this cost has been increased by 0.1 million. Now cost is 0.1 million, right? Revaluation debit building 0.1 million. Now we only debit the 110 million. 0.1 million we have to head here, right? I believe you are understanding. I don't know I am confusing or not. 110 million we have already debited, right? Definitely we will do the question on these one by one, depreciation separately, disposal separately. I have given the question, I will do that just to explain, just to give a brief idea about what is standard. Now next depreciation, disposal and revaluation also we will do. Subsequent measurement is the revaluation model or cost model. Now 0.1 million building increase. So disposal account eකට end ඕනේ 110 million, 110.1 million. Building account debit, disposal account debit 110.1 million, building account credit 110.1 million. Now we sell for cash value is 100 million. Accumulated depreciation එක අයින් කරනවා. First year I am doing, forgot about the second year. First year, so depreciation charge is 10.1. Now disposal profit is how much? Here disposal profit is 99.1 million, right? 99.1 million directly charged to the profit or loss, right? Here how much? 100 and so this is 100 and we are in second year, right? So second year end accumulated depreciation is, if cost model use, 20.2, right? So I took first year, but I took a second year and explained, but I calculated on first year. Okay, accumulated depreciation say 20.2, 2 years if cost model used 20.2. Now under 20.2, this is 110 million, right? Building. Now 10.2 million is profit, right? 10.2 million is profit. Here revaluation model use. So accumulated depreciation first year is 10.1 million, right? 10.1 million first year depreciation. Second year depreciation is 10.11 million. 10.11. Or 2 years depreciation are 20.21. 20.21. Small difference, 21. Only 10,000 increase. Now building is 0.1 million extra revalued, right? So building cost is now 110.1. Now total is 120.21. 120.21 minus 110 means 10 million. 21 point minus 101. 01 is the profit. Now this profit will be go to the P&L. P&L profit how much? 10.01. Here directly P&L profit is 10.2. Now already in the revaluation surplus, in a credit side, revaluation surplus will be shown under the changes in equity item in the balance sheet. Already we showed 0.1 as the income. It will be transferred to the profit or loss. Why? According to standard, so it will be transferred to profit or loss. So revaluation surplus transfer to profit or loss kila api meka transfer karana 0.1. Now totally we recognize the profit or loss 10.02. Here also sorry, 0.1 10.01. So 10.11. 10.11 will be actual profit here. Here actual profit is 10.2, right? Here cost is high, that's why profit is low in revaluation. Here cost is low, that's why profit is high in cost model. So these are the complex part, little bit complex. Once you do the good calculation, good question, it will be easily understood. This is just to explain the standard. So this is the actual standard, right? Just keep in your mind. And I think I have missed one thing. This is why we transfer in the revaluation surplus to profit or loss. According to LK 16, non-current assets related depreciation revaluation. Non-current assets cost, accumulated depreciation, revaluation surplus, all are company saving and keeping in balance sheet. When that asset is recognized, it means that asset is used for more than 1 year. So cost, accumulated depreciation, surplus we will keep until that asset disposed from the company. Here asset disposed. Once asset disposed, its related cost, its related cumulative incomes, its related cumulated depreciation. Cost means historical cost recognized in the building account. Accumulated depreciation means accumulated depreciation. Charge over the period, over the useful period. Now revaluation surplus. Surplus incurred since revaluation of the building. It's also we saved and keep in balance sheet. One building de-recognized, once asset recognized, its related cost, its related cumulative depreciation and cumulative income. Depreciation means cumulative expense, surplus means cumulative income. Everything should be de-recognized. That's why we transfer everything to profit or loss finally. Disposal account also, we take the cost, take the income and change, and difference we take to the profit or loss. Right? Yeah, accumulated depreciation also we took. Cost also we took. Actually cost we debiting to the P&L. Debit here. Finally we debit in the P&L. We debit P&L cost of the building. We credit, right? Debit P&L means minus. We credit this cash 100 million. Right? So debit P&L means 110 million one. Minus. Debit credit cash 100 million. Then accumulated depreciation credit plus 20.21 million. Now P&L balance will be net balance minus 110 plus 100 plus 20.21. net balance 10.1. Make a logic එක. මේක හොඳට හිතන ළමයි නම් මේක හරියට හිතනවා. මේක disposal account එක open කරලා ඔක්කොම charge කරන්න බලනවා P&L එකට. මේක loss එකක් ආවොත් මේ පැත්තනේ. එතකොට P&L එකට debit කරනවා, disposal account credit කරනවා. මේ අදන් නැතුව කෙලින්ම මේ building එක accumulated depreciation cost cash එක ඔක්කොම debit credit කරාම P&L එකෙන් තියෙන data ටික වැඩි වෙනවා. Transaction වැඩි වෙනවා. To reduce the transactions in the financial statement we use in the general ledger. මේ general ledger එක අදුවා එක entry එක විතරක් අරන් යනවා P&L එකට. To make the reporting system easy we use in the general ledger.
Thank you for watching the video. Stay tuned with castudies.lk for more lectures online.